Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, back here on YouTube looking at the US stock market using our proxy the SPY. We're also going to look at the PCC and the VIX today. But before I get into that, okay, I just wanted to take a moment of your time to talk about the Green Star Trading Patreon and why I think you should consider joining. So, one of the things I really want to get across, and has been brought up several times by our members, is this is not a expensive subscription service. Okay, you can sign up for 10 quid a month at tier 2 and you can leave the next month if you want. During that month you will get the weekly updates for the major moving markets of the gold, SPY and Bitcoin. I occasionally change out gold for oil or something, but you get a market update each week. You get access to all of the previous educational content I've ever produced, including the Elliott Wave series. You get access to a public Discord with multiple channels where you can discuss things with our other members. You get access to live streams where I cover the exact assets you want me to look at. There's a specific channel for you to make those requests. Sometimes these live streams are 2 hours, 3 hours, sometimes even 4 hours long. And that is just for £10 a month. And like I said, you're not obligated to stay. If you want that and a little bit more, you can join for £15 a month. Get everything I've previously mentioned, plus a dedicated series called Watchlist, where I look at the specific assets I'm currently interested in and go into great detail in the analysis of those assets. You also get access to the monthly dividend calendar and stock rating system. So I think it's a bargain, guys, and like I said, my whole mission with this channel over the last few years is to just try and help people get their heads into trading, into investing in a way that's affordable, isn't going to break the bank, isn't going to screw anyone over, and just try and push them in the right direction to help them develop their own skills and their own interests. You know, I'm not a guru trying to market £1,000 program or any nonsense like that. So it's totally up to you. There's a link in the description box at the bottom of every video. And if you want to sign up, feel free. But it is the best way to get regular updates, the best way to get access to all of the benefits I just mentioned, and to all the extra content that isn't available here on YouTube. So if you do choose to sign up, be aware there is a free option, but this is a nonsense option. It's something that Patreon forces upon all of us creators, and it will give you access to absolutely zip. There are 3 tiers, tier 1, tier 2 and tier 3. Tier 1 is just your opportunity to make a donation directly to Green Star Trading to help me continue my work on YouTube, but you will receive no further benefits after that other than knowing that you're a wonderful person and you have my thanks. If you want to gain something from it, then should consider joining tier 2 or tier 3, the aforementioned £10 a month or £15 a month. Alright guys, thank you very much for your time. Now let's get back to the video. Okay, so let's get underway. Classical analysis first. We have got 2 Elliott wave counts, bullish and bearish, to look at later, but let's start by keeping things simple, because what the market has done in this correction is extremely simple, and that's what I want to point out with our technical analysis here first. So what has the market done? The market, from swing low to swing high, external pivot here, has given back 50% of its gains. And it's done it in no time at all. Right, this has a lot more in common in terms of the severity time frame wise with the sell-off during COVID than it did during the broader bear market of 2022. This is a click your fingers and it's potentially over. So we've come down to 50% pullback. We've given the market back half. Okay, why have we done that? We've come back to test the previous breakout point here, where the previous high was of December 21, January 22. Market breaks out, comes back and retraces what was prior resistance to test for support. It's also done it right on the beginning of this shelf in the visual range volume profile, right in this perfect little gulf. Okay, and that is essentially what the market's done. It's traded up to a swing high, external swing high, and then it's retraced half, it's given back half. It's done it in a very short amount of time. Right. It's traded through the 250-day exponential moving average, which is the green line here, which is synonymous with larger wave degree corrections. We saw it here during 2022. We saw it here during COVID in 2020. We saw it here during the power pivot of 2018 into the lows of December 18, January 19. We've done the exact same again. Right. We've come back to a prior breakout point of support. What do I mean by that? Well, let's just take the 2 lows here, which we can see clearly, Here's one low, here's another low. We came down, tested this for support. Okay, bounced, came back, broke it. The moment we broke it, we came down to longer term support, which I just showed you, and then we moved back straight up to test that breakout point here, which is what we're doing right now. Okay, we're testing that prior breakout point to see if we can continue momentum lower or whether we can continue to rally. So, like I said, the market has done something extremely simple from a classical analysis point of view. A larger wave degree correction, which broke through support and is now being back tested for the resistance. A longer term swing, which broke prior resistance and has come back to test for support. That's what the market's done. So the question is this the low or not? Well, in a very fortuitous set of events, the market not only traded down to here, but they traded down in 3 clear waves, not 5. Right, so that means that instead of a total unravelling of this market, which is what some people are still leaning towards, I don't see that happening at all. Right, what I see is 2 very simple options. This is 3 waves. Right, option 1, that's all she wrote, guys. We're done. Test the previous market breakout point, gave back 50, did it quickly, rallied like buggery, and we really have rallied like buggery out of here, and now we're done. Alternatively, this is one zigzag and it's going to be tied to another zigzag, and we will have a double zigzag. We are not going to have, we did not lead with an impulse. An impulse down could have been A, B, C again, right? But it could have been 1, 2. Thankfully, we've avoided that scenario for the bulls. It will not be 1 into 2, and therefore we will not have 3, 4, 5, A, B, and down to hell. So longer term macro market uptrend will remain intact. I would bet 80% odds on that being the case. Some would say 100, but I'm never that confident. But so the longer term macro trend is intact. I see either we're done or we have one more 3-wave swing lower. Now how low that goes, nobody knows. We don't have a crystal ball, because zigzags do not have to elicit strong relationships to one another, unlike an A and a C, which are both impulses connected by a B in a normal zigzag. 2 zigzags joined together in a double or even a triple zigzag don't have to elicit the same relationship to the same degree. So it could be bigger, it could be smaller, it could just sweep the lows, it could go a lot deeper. But in my mind, as my members would tell you, I'm a bugger for thinking this way, is this was an opportunity. If you go back to the prior YouTube video, I spoke about how it was called fear and opportunity down here. You know you're going to bounce, right? You know for certain that you are going to bounce. And I'm not being arrogant. Anyone who's been trading long enough knows for certain you're going to bounce. All right. Multiple divergences over multiple weeks eliciting this sell-off into oversold conditions on the weekly time frame. We have not visited oversold conditions on the weekly time frame since COVID back in March 2020. Right, we broke the 250, we came back to long-term support, we built up this bearish momentum, right, we were going to bounce. So that is an opportunity in itself. Now what do I mean by that? Yes, we may now go to new highs, and anything you brought down here, what you do, you're going to make a nice profit on. But the bounce has given you an opportunity to get into profit on positions already, whether it's the Magnificent 7 you brought or whatever. Okay, now you're already in a positive trade. You can now control those. You can control risk even better, because obviously, if you get stopped out now in profit on the way back down, you can wait for that second zigzag to complete and reassign everything further down. If not, you've already secured a position and you're on your way to new all-time highs. Now all you got to do is wait for pullbacks along the way, which come frequently in every uptrend. Right? So this is why you don't look a gift horse in the mouth. The difficulty comes with, and I'm trying not to be preachy here, the difficulty comes with experience. Okay, a lack of experience, people tend to get very bearish during sell-offs. Right? Bears tend to double down at the lows. So the bears will be like, oh, that's it, it's the end of the world. We're going to zero, and then the market bounces and kills them all. Right, the exact same is true when we reach euphoric highs. The more volatile the market, the worse it is. Sell-offs in the stock market tend to be more volatile than the moves up in crypto, for example, the move ups can be equally volatile, if not even more volatile, and the sell offs can actually be quite long-winded affairs. They can still be volatile themselves, but the point is, in those euphoric highs, the bulls double down. I'm a genius, new paradigm, off to the moon, right? Remember that. The bulls double down at the highs, the bears double down at the lows. Listen to the right voices at the right time. If the bears are doubling down, as they were, a lot of them were down here during the sell-off, that's a very strong sign, given the oversold conditions we've got on the weekly time frame, all the other metrics I just pointed to, that's a very strong sign we're about to bounce. That's the opportunity if you want to be long. Right, so anyway, there's a classical analysis. I don't think there's much else we need to discuss. We've spoken about our moving averages, we've spoken about our MACD, our RSI, breakout point retest, giving back 50%. Oh yeah, volume, right? I said we came off of a low light buggery, and I mean it. We came off of a low light crazy. This is the most powerful thrust, bullish thrust I've seen off of a low since, what's that, the COVID low? Since the COVID low. 2020. So the bulls were not mucking about when they bought into these lows. They were not joking. They committed here. Okay, so that's a strong thrust. On the note of saying a strong thrust, we do have an opportunity. Now there's 2 days left in the month. By the time you guys get this on YouTube, patrons will get it before you today. YouTube will get it tomorrow. There'll be 1 day left in the month if you're watching on YouTube. Now if we close up for the month, things are going to look funny. And I mean genuinely funny. So what I mean by that is, let's go back to the monthly time frame. We've all seen some bullish candles in our day, right? Check this one on. Check this one out for size. What in the name of sweet Jesus is that thing? Right? Because on the monthly time frame, I don't think I've ever seen a bullish hammer like that. Is that the GFC? Yeah, so in all the time I've been trading, I've never seen a bullish hammer like that. Right, that's crazy. But kind of funny if it finishes like that. If we close like that, can you imagine if this thing just turns green and we get a dragonfly on the green on the monthly looking like that? Now, it's not a guarantee that it's a pivot and it's going to go off to the all-time highs, but you can't ignore it. You cannot ignore it. Okay, now it's also possible that in the time since I've been speaking to you, the market decided not to be quite so obvious with its intent, and it traded down, and we got a big red bar to close the month instead. Right, very different picture if that happens on the monthly time frame. Okay, but for the moment, things could be pretty screwy. Right, so I sound bullish, right? And I've already said opportunity. You don't have to get wrecked. If you buy these kind of lows and you go into these obvious bounces, we've had a significant rally. You got plenty of time to secure your stops. You got plenty of time to secure your gains, right? And now you can either hedge them out or you can take profit. Now, I personally hedge it out and say, well, if we do come lower, it's not going to hurt me. I'll be out the trade. I'll have an opportunity to get back in later at the next low, right? But the thing you don't want to end up doing is becoming super bearish at the lows with all the other bears, missing the opportunity, and then chasing into the next high. Because if you chase into the next high, and it is a broader correction, that's when you get bent over. Right. So anyway, that's enough of the bloody lecture, because I've been going on back and on for a while now, haven't I? So that's how I see the classical analysis anyway. So now let's come into the 8 hour for a minute and have a look at these Elliott wave counts, shall we? Right, so bring up the primary first. 5 waves into a high. 1, 2, 1, 2, 3, 4, 3, 4, 5 into this high. Let's just adjust the chart to log so you can squeeze it together a little bit better. This is a wave, intermediate wave 5 high here. This caught me out, as I said in the previous video, because I saw 3 waves down, 3 waves up. This is a few weeks ago now, and then 5 down to here into support, right? We did test it and we bounced. This is prior support, resistance becoming support. It looked like a flat, it looked like 3 into 4, so I was calling it such. Then we rolled over. Definitely not that anymore, okay? That's because I missed this rather sneaky ending diagonal, which hid itself in here and looked like a flat, masquerading as a flat, but it was actually the continuation of the motive structure into a 5. That's why it caught me out. But the best of us get caught out at times. came down in ABC. We could be done, or it's WXY. Like I said, coming back and testing resistance. Now we roll over to go lower. Now, believe me, if we roll over and go lower, I won't be crying about it. I'll be welcoming it. Because do you want to buy? We've just led with 3, not 5, guys. Remember that, please. We've led with 3. We've come back. We go down with another 3. This will be an even bigger buying opportunity. We have the possibility of coming down into the 61.8 to 78, maybe the 89. We don't know how deep we're going to go into all this price support, but there's a lot of support down here. So if we do come lower again, better buying opportunity than even this one, of course, just logically. So might have a bullish bias because I've seen a low put in place, and it is a low. Might not be the bottom, but 100% we knew it was going to be a low, right? So now we need to see if we get a lower low. If we do, we'll be buying it. So that's the bullish count as I see it. This is it, ABC or WXY. Shorter time frame coming off of this low. Let's have a look what we've got. So we could be building a diagonal. I don't know exactly how this is going to appear over the longer time frame because we haven't got the third wave complete yet. We have gone beyond where the wave 1 finished, so you could argue that the wave 3 could be finished, but there's no pivot in place as I'm speaking to you. What do I mean by that if you're new to the channel? I mean there's no clear sign of reversal. That's what I mean by pivot. Okay, so what we could do though is you could just do it like that, right? You could just put the 1 and you could say, well, here's the 3 here. 3's coming in now. 4's going to come in a little bit later. You know, and until you get the 4 in, you can't really adjust this to look right. You know what I mean? It could be anything yet. So the best bet, I think, for a bullish count is that it's going to be a diagonal. 3 into 1, 3 into 2, 3 into 3, 3 into 4, 3 into 5. The bearish idea that it continues lower would just be ABC into X. And then down we go in ABC into Y. So that's my best bet of the shorter term time frame. There is an outlier here, and it is very much an outlier. Yeah, and that outlier is the idea of a truncation forming at the lows, like this. So we have a truncated low here, and instead of counting this as 3 into 1, we can simply count this as 5. So we go up in 5, A, B, C, back into 2, and then we're moving away in a much stronger 3. So instead of getting a diagonal here, where we progress in shortening waves before breaking down again, we just explode higher. Now there is a gap to fill here, so we might in a shorter term have a pullback into here for another wave 1. Another wave 2. So we go 1, 2, 1, 2, 3, 4, 5, and then it's party time, right? We're on our way to new all-time highs, for guaranteed if that's the case. So that's if we've got a truncation. Now this has to be considered an outlier because truncations are rare. Okay. Rarer than diagonals are, significantly so. But the reason I can entertain it is this is the 3 wave swing from the high, right? If there's 5 waves in this move down, here's the 1, here's the 2, where's the 3 and the 4? Well, if that's the 3, that's the 4, that's the 5, and that's the justification for the truncation. There's no overlap. The 3 is clearly not the shortest. It's strong enough to be extended. There's 2 runaway gaps in it. That would explain why the 5th could not go any deeper. All the sell-off that could be done was done in this move here. Now that's a justification for a truncation, but it's not a guarantee that it's there, and it's still a rare occurrence. So we can't favour it, is what I'm saying. It can't be our primary count. But it's a possibility that we had truncated lows here and we've just gone 1 into 2. This leaves us to go 1 and 2 again eventually, maybe later today, maybe tomorrow, maybe out into the early part of next month, and then we push higher in a 3. But I think supporting the idea of a diag at the moment for the bullish count makes more sense. And if we're going to be bearish, which is a possibility, we would just simply put an ABC in here, right? Now, we don't know if it's going to be a much bigger ABC, but I would argue in the meantime, we should just count it as WXY rather than ABC. And say 3 waves, zigzags in here, because we led with a zigzag. So if we're not saying 3 into 1 and 3 into 2, we have to say 3 into W, 3 into Y. 3 into X, 3 into Y, you see? So that would be the bearish count, WXY. And that's how I see what I'm calling my primary. Okay, yes, it has 2 options, but because it's led with 3, it's only the 2 options. So I'm just going to label it primary. ABC, let's assume the low's in until proven otherwise. If it's not, it will go WXY and down lower. If it has completed, it's likely going to form a diag. If it doesn't, it could be this truncated count where it's 1, 2. If this explodes higher, that makes sense. There is one more count to consider before we wrap things up and look at the PCC and the VIX, and that's the idea that we're actually still in a 5-wave move to the high, and this is a very deep wave 4. And that would look like this. We've had 1 and 2 back here, 1 and 2 here, 3 and 4 here, 3 and 4 here. So we had a sideways structure here in the flat pattern. It was a running flat, which is pretty rare, but not impossible by any means. So we had a sideways structure here, and then to alternate at wave 4 with wave 2, we had a sharp structure here. Sideways sharp. This came back to the 50, which is the roundabout, what I would argue, the maximum target for a wave 4, but it is a wave 4 target, 23.6, 38.2 and 50. We came back to the 50, into that target zone between the 23.6 and the 50. We alternated with the wave 1. The wave 4 did not overlap the wave 1. The wave 3 was not the shortest. It's a perfectly legal impulse. Does it look pretty? No. It does not look pretty. It does not have the right look. It does not channel particularly well at all, and therefore it's the alternate. And that's it. They are the 2 counts. So let's bring these up to the top of the template here on the drawing on the right hand side. And we've got the primary 1 into 2. It's either done or it's got one more zigzag lower. Okay, we come off below as a diagonal or a truncation into an impulse. Alternately, we've completed wave 4 as a sharp, and now we're going to go to new highs in a 5, and then something much nastier is going to come along afterwards. Okay, and those are the 2 Elliott wave counts. So let's move on now and have a look at the PCC and the VIX. So PCC, on the long term, on the daily time frame, we had an extreme reading here on October 27th of October 2023. We since that was the high in the PCC. That was the most extreme fear and bearishness state we got into. We swung the 60 exponential moving average through the 250, and it has stayed below since. It has now spiked back above it. This happens. During a move back to bullish complacency, they often swing and oscillate around one another. You know, sometimes we don't make it all the way back before we have another swing into fear. That could be the case here. So we have to pay attention to the fact that we didn't come all the way back to extreme fear and extreme complacency and bullishness, I should say, and we have moved the 60 back above the 250. A further move lower in the market will likely look like this. Right, we will have more extreme fear and complacency if we get that other zigzag. If we don't, we are likely to meander our way continuously. Who knows how we're going to do it, but in long term, we are going to go from here to here. Right, we may have to go up for a little bit and then swing back down, but I think if we're going to get the more bearish play out, that's what we'll do. We'll swing back up. We can just add in the 10 exponential moving average over the short term just to get a clearer idea of the spike in volatility on the short term. So on the shorter term, that sell-off, which came to extreme oversold conditions on the weekly and daily time frame on the RSI, did reach all the way back up into extreme fear and bearishness, right? But of course, the levels for doing this on the smaller time frame are more severe because there's more volatility. So we come up higher than we would when measuring the longer term moving averages because it doesn't smooth out the data as much. So we did have a proper spike of fear, and we have retreated back down since. So if the 60 continues to roll over, we will resume our downward move towards long-term complacency and bullishness. If the 60 starts to curve up and the 10 and the 20 curve up as well, then we will lead the 250 back towards extreme fear and bearishness. In that circumstance, we get a continued sell-off in the markets, right? This will confirm a deeper swing lower, a broader correction, a longer-term wave 2. And that's fine by me. Bring it on, if that's the case. So let's now move on and have a look at the VIX. We've got another little high we need to label here. I need to just see how high it is. It's not quite as high as the 2024 recession fear, but we did make it across the panic line, which is the 50. So any sustained move above the 50 normally elicits, any move above the 50 points to it being a more severe incident, right? So COVID here at 85.47. Recession here, fear 2024 hits 65.73, but it was only momentary. The GFC 96.40. That was a more sustained move above and staying above the panic line for a long time. Then we've had multiple little instances over the years which have just come up to it or just fallen short of it. This recent one breached it again, but did not go as high as the prior. So we're just going to put a line here, and we're going to paint it red, and what are we going to call this one? We should call it tariff/trade war panic. I think that's fair enough title, don't you? Okay, and that was 60.13. Now obviously this is a temporary, this may be permanent, sorry, but this could be temporary. If the VIX has sold off aggressively again, broken through prior pivots back below long-term downward trend line, but it could bounce. If it bounces into that second zigzag, we will probably go higher, and this whole thing will be relabeled, I don't know, market crash 2025, something like that. Stock market crash 2025. Yeah, and it'll be a much more significant event, and we'll see that across the board in multiple places, won't we? So there we go. We've got a new label, tariff/trade war panic. Came in at 60.13. It was here for a moment, a little bit longer than the tiny little blip for the 2024 recession fear one, but we were here for a few days and we've traded back down. The VIX is retracing the breakout point, this similar on its chart as the market did itself. So we may be looking for support if you can do technical analysis on the VIX. I'm not sure you can, but either way, you take my point. That's what we're doing anyway, so we might as well point it out. We're back below that downward trend, but we're coming back to support. Any bounce in the VIX is going to elicit more sell-off in the stock market, right? And then if we, depending on how bad it gets, it could be temporary move higher before coming lower again, or it could be another swing high. In the meantime, that was a significant sell-off. Went through the panic line, went up to 60, extreme oversold conditions on the weekly time frame, high readings over the shorter term moving averages on the PCC, a lot of volume coming in off of the lows. It was a volatile move, but it was sufficient for the market to have found the bottom. Not convinced yet that it has, but I'm going to play it like it has, because that's how you get the best out of these opportunities. If it does roll over lower, no worries, we get stopped out, preferably in a profit, and then we'll buy back lower later. So there you go, guys. That's how I see this SPY. Let's see how things develop over this coming but let's see how that monthly candle closes first, because I do think that's just a little feature of interest. I'm going to just point that out as a little curiosity that I haven't seen that before. I've seen bullish candles, don't get me wrong. I've seen hammers, I've seen dragonflies, but I've never seen anything on a monthly chart of that scale with that volume behind it. So that would be a genuine little curiosity that I think we should just appreciate for it being there. If, of course, we roll over between now and the next 48 hours and we don't get that, fair enough. We'll see how the next month opens, and I'll be back with you as soon as I can. So until then, if you're new to the channel and like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn how to do all this Elliott Wave stuff for yourself, and you're interested in a whole bunch of other stuff that's available, you can go and join the Patreon. There's a link in the description box below. Right, take care of yourselves, guys, and I will be back with you as soon as I can. All the best. Bye-bye.